March 6th, 2025. The day started off with a big gap down, and in general, gaps are going to get second legs. I didn't really think that I wasn't that bearish on the day, to be completely honest, because we had a really good looking rally yesterday. Sorry about that. We had a really good looking rally yesterday. I thought we might try to test back up into this area. And again, big gaps, they do often get second legs. That's something I could have done a better job of keeping in mind today. But I thought that this rally was strong enough that we should at least get some sort of bounce. We did end up getting a bounce on the open, obviously, and then we got the second leg down for the bears. So what needed a second leg today? I think the first thing that first off, I thought we were relatively oversold on the open because of the rally. So I thought it was okay to be looking to buy in this area. I wanted to buy, I just never really got a signal anywhere in here. I did buy the close of 9. I thought it was okay to buy, expecting a second leg up, 75, 80% chance that we get at least some sort of second leg up. So I did buy, expecting that we get another leg. And you can see we traded below on 12, and then we do get a second leg up, 14, 15. The problem with 14 and 15 is it's 3 legs up. You can count it 1, pull back 2, pull back 3, or if you just want to count it 1, pull back 2, and then pull back again on 13 and then 3, that either is fine. But we do have 3 legs up either way. So while 14 and 15, they're those theoretically reasonable buys that if you scale in with a wide stop, you should be fine. Traders willing to scale in on 16 and 17 consecutive bear bars closing near their lows. Good for the bears. We might go a little bit lower, but right now, I think that the channel up from 7 to 15 is pretty tight, and that is going to make us go a little bit higher. However, 16 and 17 are strong enough to make me think it's not a bull trend, and that we're probably going to be a little bit more sideways to up rather than straight up. And then you can see we got a 2-legged rally up to the bar 16 high. Traders selling ended up selling more, or maybe sold more below 21. It's logical to sell more below 21 since we should get below the 18 low. Why should we get below the 18 low? Because the bears who sold the close of 16 or 17 are expecting that we sell off, are expecting that if they scale in, they should be able to make money. And the way they would make money is if we get back below the 18 low. So they sell closes, scale in, and expect that we get back down here somewhere. This, the sell off to 24 should get a second leg. Traders, they sell the close of 24. Maybe they scale in. It's kind of tough to sell the close of 24. It is a 4-bar micro channel, but there's such large tails on 23 and 24 that it's not really as good as it could be. So selling this close, not all that ideal. Some traders sell the pullback. You can see we retest the high close of bar 20, and then we start the leg down. You could argue it's a lower high, major trend reversal. You can see trend line break, or I guess you could say higher high major trend reversal. But the higher high major trend reversals like we get on 21 usually get a lower high first, and that's what we got on 25. You can sell the close 26, 27, 28. Like I said, I wasn't really expecting it that much. I'll go over what I did today. So I bought the close of 9 and I exited on the close of 14. I bought the close of 9. I added on during 12 somewhere in this area, and I added more on the close of 13, and I exited on the close of 14. I did not sell the close of 28. It's a good trade, but I wanted to see if I could get a pullback. The reason being we had 3 legs down. So I thought we might get some sort of pullback and then a second leg. And I was hoping to sell a pullback, and instead we went straight down. So I missed out on this trade. I bought the 45 high during 48, but I thought it was kind of a mistake. So I just exited on the close of 49. It's 2 legs up against a really tight channel down, and the whole thing's going to get a second leg. So I just exited basically a little bit worse than break even during 49. I sold the close of 50. I scaled in on 53. I scaled in more above 56. And I probably should have exited when we got the second leg down. But instead, we got a disappointing follow through bar 63, and I exited on the close of 63 for a small loss. I think it was probably a mistake. I was going for a leg 2 measured move, and it wasn't really for any good reason, to be honest. I probably should have just gotten out. I thought that we might try to get a lot more down simply because of how strong this was. So I was trying to get somewhere in this area. And instead I ended up exiting for a small loss over here. So I actually took a small loss today. But anyways, 25, 26, 27 is going to need a second leg. Or sorry, 26, 27, 28 is going to need a second leg. You can sell the close of 28, or you can look to sell a pullback of 28. You can sell more on the close of 29, sell more on the close of 30, sell more on the close of 31. It's all going to get a second leg. It's 6 straight bear bars. So there's nothing to buy. There's no real reason to buy, which is one of the reasons why I thought my later buy was a mistake. We get a 4-legged channel. 33, 36, 38, 40. So it's 4 legs down. Do you buy above 41? I mean, you're missing the point if you're buying above 41, I guess is all I would have to say. Yes, can you buy above 41? Yeah. Can you buy the close of 42, scale in 43, 44, 45, and then, scalp out above the 42 high during 46? Yeah. But you have to keep in mind it's not really as good as it could be, because what you're doing is you're scaling in, essentially against the trend. So if you missed out on the entire sell-off and all you did was bought above 41 and scalped out on 42, or just basically traded the one move, I would question your strategy, because it's probably better to be trading with the trend. So you sell, you can 48, 49, 50 should get a second leg. 51 is disappointing. Some traders exit, and then we pull back 52, 53. And then you can see second leg down, 54, 55. We get a 3-legged channel down to 60. This whole move up is going to get a second leg, but it's a trading range, so it could get a deep pullback first, and we have a lot of long move against it. So if you're buying closes up here, you're scaling in lower, and you're using the rally to get out back around the bar 64 low. So if you're buying, you're scaling in, and then you're using the rally. Or if you get these 3 bars, you scale in and use the rally to get out. And then it's obviously too late in the day to trade. Just gonna make a quicker review today, but the daily chart. I thought it was a lot less likely that we got a bear trend today, so I was a little bit surprised. But we've had basically 4 legs down. It's a tight channel down. I'm not sure how much lower we're really going to go. It looks like we're entering a support area, but as long as we continue lower, we're continuing lower. So nothing to buy yet, but the bull is looking for a good looking reversal up. I don't know how much lower we go. The weekly chart tomorrow is the close of the week, so that'll be important if the bears can get the bar to close on its low and get follow through. But we will see what happens, because I do think that if the bears aren't disappointed this week, then we're definitely going to need a couple of legs sideways to down. So if the bears are not disappointed, I would expect that we get 2 or 3 legs sideways to down for, maybe to 5,500 or something along those lines. All right, that's going to be it for the video today.